Election results, corporate earnings, and then even monsoon forecasts. So many moving parts for the Indian equity markets. What's in store ahead and what should you as equity fund holders do? I have with me Devender Singhal, equity fund manager with Kotak Mahindra Asset Management Company Limited, to discuss all of that. Hi Devender. Let's start off by talking about the fourth quarter numbers as released by India's corporations. What is your take on how India Inc. performed, the management commentary, and any sector that really stood out for you?
So, Mubina, what we've seen in the result is that they're broadly in line with what the market was expecting at the start of the quarter. So, there are no big surprises. Barring a couple of sectors, to specify one big sector is the BFSI space, specifically the private and the public sector banks. There, while the credit growth were in line with expectations, but the profitability has been far better than what market was expecting. So I think that one sector stands out. Apart from that, a very small sector, media, which doesn't have too much of a weightage in the market, and real estate. These were other two sectors which actually stand out both in terms of growth as well in terms of profitability versus what the market was expecting at the earlier point in time. So barring by and large, these were three sectors, and then broadly we were there in line.
For a long time, India's investors would look at what Wall Street did overnight, but it seems that off late we're singing our own tune. The Sensex is moving from strength to strength. What is your reading of the way we are seeing the markets move off late?
In fact, I'm glad that we are doing that, In fact, for the first time, the domestic ownership has actually moved past the FI ownership in the market. And this is all courtesy the strong domestic flows which you are seeing. You are seeing the SIP numbers which are moving up month on month. We crossed 20,000 crores last month. And I think I'm certain that these numbers are going to go much beyond that levels in coming years. On top of that, the current participation in the equity market via mutual funds is still pretty low if you compare the number of folios versus the number of demat accounts or the number of crypto wallets. There's still a lot of catch up which needs to be done. And with interest rates declining, I don't think there's any better avenue than the equity markets for the investors to come in. So yes, it's a happy situation to be in. Secondly, FIs have been coming in and out of India. It's not that they've been not being there. It's only in the last couple of months where they've seen some outflows. So typically you see FIs, the money is very swift therein. So if you find a better opportunity in other markets, for example, China was in a bit of flavor last couple of months. So I think some flows have moved there, but I don't think any investor can basically ignore India with the kind of market size we have and the strong growth prospects we have over the coming years. So yeah, a long way to go.
Speaking of folios and SIP flows, we're seeing a lot of money moving into thematic funds and small and mid cap funds. Rather, the flows into small cap funds in particular have kind of returned. What do you think is causing this kind of interest, particularly in thematic funds?
Well, it is a good news that funds are coming into the market, but sometimes the funds also chase momentum in a particular sector. So whatever seems to be doing good, investors chase returns in that, and that is where thematic funds are also gaining traction. We have seen that the market has seen a very, very sharp sector rotation happening when one sector moves ahead of the others. So people try to catch that, and hence the lure of thematic funds to participate in that sector's overall market movement therein. But nevertheless, if you are therein for a long haul, it's a good option still to be in equity market. Though we would advise investors to look thematic as a flavor to the overall portfolio and very tactical in nature, not as a mainstream, core holdings in a portfolio.
So come the 4th of June, we're going to be having election results. What would you watch out for from the point of view as an equity investor?
See, equity markets loves visibility and predictability. That is where you give valuation multiples higher than what you are giving there. Now, if the market and election results basically leads to a political change or not change, whether the current government comes in or the new government comes in or the new political regime comes in, it has an impact on the economic policies also. So anybody who's looking at, long-term investments, specifically the equity investors, they do want to hear out, or they want some assurance that the policy initiatives or the policy reforms would continue in what they've been envisaged. So today the market is factoring that the policy reforms would continue with the current government coming back to the power. But markets are they have their own movements. So depending on the election result and how well the market is poised before that, any disappointment or any surprises will lead to a volatile movement on that day for sure.
And finally, of course, as equity fund holders, we don't really trade on binary events like these. We are long-term investors. So what advice would you like to give to equity fund holders?
See, I would say that we have seen over the last 30 years that whatever government comes to the center, economics has to be at the forefront of the agenda. Even if you have welfare measures which you want to do for the society, you need capital, you need resources to do that, and you cannot ignore the economic reforms therein. So we are sure and we are very, very hopeful that this continuity in the reforms would be there, whether this government comes in or that. So keep your faith in the market, stay put, look at long-term horizons, and I'm sure this is one of the best markets for you to get your returns therein.
Devender, thank you so much for that. That's the word coming in on all that you should be watching out for when it comes to the Indian equity markets. Thank you for watching and stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.